The Uganda Shilling weathered a fairly turbulent 2023 to only depreciate by less than 1% against other regional currencies that all depreciated by more than 2%. But analysts say the outlook for the local currency is more disadvantaged and may as well settle in the 3,800 zone against the US dollar for 2024. A key factor at play may be the reduced central bank reserve, which are now less than 4 months of imports.
When you look at our international reserve levels, we are short of the what we call sort of a benchmark, recognized agreeable level of international reserves that the country should have, which is normally 4.5 months of import cover. I think my last reading was about 3.8. Now, that whole issue of diminished reserve levels has an impact on the shilling, because the central bank is not able to come into the market to smoothen out volatilities that come along alongside other market events. Now, when that happens, the market is not very confident that if the shilling starts showing weaker movement.
With the challenge of debt servicing still present, the reserve question may not improve. Global exports, which is a sure way to show up the exchange rate, are apparently also in doubt.
Last year, we were also supported, if I may step back a little bit, supported by coffee proceeds. Coffee did very well. There was some sort of a boom. That also added to our flows in terms of moderating the depreciation pressures that we saw. But we see that seems to have passed. And in relation to exports, I do not see strong flows coming from that. We'll continue to import, and that imbalance will create demand for dollars and therefore impact.
The hope by other economists that may save the shilling from more serious depreciation may perhaps be the oil and gas sector, which is well deep into the development stage. Rachel Nabisubi, NTV Business.